This is Robert Kraft, and I'm coming to you live on SNNLive, and we're at the LD Micro 10th Annual Main Event in Bel Air, California. With me right now is Will McAndrew from Amazing Energy Oil and Gas Company, publicly traded company with the symbol AMAZ. Will, welcome to SNNLive.
Thank you, Bobby. Always a pleasure to be here.
Always a pleasure to have you on. So, for our audience, let's start off with an overview of the company and go from there.
Well, we are an E&P company based out of Amarillo, Texas. We have properties in Texas. We have properties in the Permian Basin, which is, as you know, they say the Saudi Arabia of America. And it's where all the companies are going, the most prolific production. It's really what turned the oil and gas production upside down in the world. In this basin. And we have a very unique situation that our chairman put together and founder with a block of acreage. So we have the rights to within a 70,000 continuous block. I mean, you stand in the middle and it's 100 square miles as far as you can see. And we're surrounded by majors. We're surrounded by production. There's been some production on the property since the 20s. And we have the rights to come in here and drill. And we have literally tens of thousands of wells that we can drill on this property.
So let's get a history of the company. When did it start and how did you develop to where you're currently at today?
Well, again, our founder, Jed Meisner, got out here and he bought this property, bought the rights to this property for $3.4 million. And then come to find out that his partner and J.P. Morgan Chase were trying to take advantage of him. So he went and drilled some wells, got into litigation with them. And that's another great thing about this. He won the litigation. 2 years and $1.1 million of his own money after buying the property and drilling wells whether he didn't know if he was going to keep the property or not, and he still went and did it. I mean, he had the faith to do that. And then, so the judge has signed off on this, and what is really quite remarkable and unbelievable is the fact that he has this property tied down, paying $200 to $300 an acre forever, as long as we meet two minimum requirements. And we're doing those things, and he's done those things. And so when you look at this property and you look at 1, 2, 5, 10, 12 different potential pay zones that have multiple horizons or benches in each one, then you look at around the property that we have Pioneer and Apache and Kinder Morgan and ConocoPhillips, all that have drilled and producing in and amongst and around us. This is just a tremendous property. We should never lose this property and paying $200 to $300 an acre.
So Jed already did a couple drill holes on the site. Where are you currently at in your drill program? Do you have some planned drilling? Do you have some programs underway right now? Where are we at in that development?
Well, we just announced about 2.5 weeks ago a potential joint venture. We signed an LOI, final documentation is being put together, and it's a $39 million project to come in and drill 144 wells over 3 years. And we get carried on all those wells. We don't have to put up any money. Our CapEx budget is taken care of. We just closed on $2.2 million, so we put that money in the company. We have 2 years of overhead. We're not here and having to raise capital. And Bobby, if you think back when the oil price crashed before and all the 117, 18 companies went into bankruptcy, they overpaid. They didn't do the science to understand what they had, and they drilled because everybody was throwing money at them. We're not making those mistakes. We had $200 to $300 an acre to get in. We have somebody else paying our way, and of the $39 million, $5 million is specifically for science. 3D seismic, barrel cores, sidewall cores, different type of logging techniques, horizontal drilling in shallower zones, potential doing the cores to be able to do sidewall cores and to do water flooding and CO2 floods. So we're doing all the things right. And the fact that we don't have any kind of challenging investors in the company, it's tightly held, they're good people, and they're doing it for the right reasons.
So, I also want to know about the differentiation factors. How does Amazing Energy differentiate itself from the competition?
Well, first off, with the asset we had and the conditions and terms for that asset. And second being is that we're nimble and we're quick. I mean, we do the science, we do the due diligence. One of the things that Jed really, really needed desperately over the years, I mean, he did a phenomenal job bringing this property together and holding this property, but he needed some geological help and engineering help and geophysical help. And so we've brought the same team from the last company in place that we, as you know, on the last company, we found a potential billion-barrel oil field. We think we have that here. Baker Hughes put out a report March of this year showing that they believe if you look at all the different potential pay zones that this property, and that was around $40 oil, but put out this property has $15.3 billion of potential probable production off this property. And it's just that size and scope. And so time is normally an oil and gas company's enemy. You get a 3-year lease and a 2-year lease extension. You're paying X amount of dollars per acre, and you've got a drill to hold. Time is our friend. With the way that this deal is put together, we don't have to. We're not in a hurry. We're not in any sense of urgency. We don't have to have money, and that's why we're here with Chris at LD Micro at this conference, is just to introduce the company. We've got our overhead taken care of. We've got our drilling budget taken care of. 144 wells over 3 years, 500 wells over 5 years, and that's still only 29.6% of the entire property being developed in one zone that's out here. So we're in a very unique position when it comes compared to other companies and the type of positions on a block of acreage of this size and quality.
And what's your background? How did you get into all this?
Well, Jed worked for Exxon for 13 years. My family, as you know, worked for Exxon, Esso, Humble, one of them, for 4 generations. And as you know, my grandfather was the first person to receive a 50-year service pin, and he got it when he was 61 years old, which is a pretty novel story. And I worked there for 5.5 years. But once I left Exxon in '83 and moved to Dallas, it was working with other oil and gas companies or helping structure, do due diligence. And then I started working with public companies. And then from there, it just seemed like a natural fit to move forward and bring the relationships that I have in the industry on both sides of the coin into do like companies like my last company, and more specifically with Amazing. We have so much more here in this company today than the other company did, and we took that company from nothing to something in 9 months, from $1.75 to $5.50 a share, and uplisted to NASDAQ. And we fully do understand that while we are an oil and gas company, we have engineers, geologists, geophysicists, production, operational people. We own our own rig and completion units and so forth. We do understand also that we're a public company. And that's why we're here with Chris, and that's exactly the reason that this is our first ever conference. Jed has not gone out and introduced the company to anybody over the years, and that's one of the things he's brought me on board with, is to try to mitigate the swim with the sharks, if you will, and try to find the good people to do business with and the ones to stay away from. And that's what we're doing. We understand fully we're a public company, but at the same time, we're an oil and gas company. And you need both of those parts of the puzzle moving down on a parallel track at all times.
Sure. And Will, what are some of the company's growth drivers moving forward?
Well, we've got a couple of different things we're doing. Obviously, I've shared with you the property in particular that we've talked about, and we've got a drilling program. We've got, the property is so large and vast that we could have a very robust drilling program with multiple joint venture partners. We've announced one. We have others that we're working on right now. So that's going to be a significant driver. And this is something that we own. We don't, and in no terms or conditions should we lose. So the next question would be is how do you grow through acquiring cash flow? Well, Jed's got a formula, and he's got a unique formula, and he takes that formula and we apply it to different properties, and we buy properties based upon what they call PDB, proved developed producing wells, and we look at that and we multiply that number times 36 months, and we're only buying cash flow, not upside, not offsets, not infrastructure, just buying cash flow. And we've got a couple of those that we're looking at, because we got to think this property with a couple of joint venture properties, joint venture partners will take care of itself. I mean, we have oversight. We're still the operator. But at the same time, we have other properties that we can bring to the table that's immediate cash flow that does have a tremendous amount of upside potential. And we're working on that as well.
And where can our audience go and find more information about Amazing?
www.amazingenergy.com. Or give me a call at any point in time. Our stock symbol, as you know, is Amazing, AMAZ.
My name is Robert Kraft, and I'm coming to you live on SNNLive, and we're here at the LD Micro 10th Annual Main Event in Bel Air, California. With me right now is Will McAndrew from Amazing Energy Oil and Gas Company, publicly traded company with the symbol AMAZ. Will, always a pleasure.
Always a pleasure, sir. Thank you, sir.